This is episode 82 of the Andrew Hines Real Estate Investing Podcast. Welcome to episode 82 of the Andrew Hines Real Estate Investing Podcast. Today I have Ryan Carr on the episode, and if you don't know Ryan, you should, because the guy is a legend in the infill development side of things here in Ontario. He's also a very savvy constructor, a very savvy real estate investor. He just does it all, and he does it at a pretty young age. Very accomplished, and he has a really impressive outfit around him that he's built up. He started as an auto mechanic, and he eventually lost his job, and then with the support of his wife, he actually moved into real estate investing full-time, and he's been there ever since. He spent a good portion of the last decade doing what he's doing. He's absolutely filled with knowledge, and this was just an absolutely awesome discussion. So we discussed everything from the nuts and bolts to finding a lot that you might be able to develop. And for those of you who aren't familiar with development, that's when you take a property that's, say, a single family unit, and maybe you look at severing it into two lots so that you can build two houses or maybe two triplexes. Ryan and I talk about a sixplex that he's working on developing right now. He's got his offer accepted on the lot. So that, among many other things, including how to scale and grow your business, how to find employees and hire them, and enable yourself to uncap your growth potential, which is something that I've been very open about on this podcast. That's obviously been a struggle for me. I do have a certain team that works for me on the construction side, but of course I am looking for help on the personal and administrative side so that I can free up more of my time and focus on income producing endeavors. So really cool episode. I really enjoyed it, and I know you're going to enjoy it too. Quick reminder to please make sure that you're subscribed if you're watching on YouTube. Maybe share this with somebody that you think it could help. And if you haven't already done so, if you wouldn't mind leaving me a 5-star review on Apple Podcasts to let people know what you think, it will really help this podcast grow, and I'd really appreciate it. And also, if you haven't already grabbed yourself a copy and you want to use the cash flow sheet that I use to analyze deals, you can simply visit my website, www.andrew-hines.com, and you will see the link to download that there. So without further ado, please enjoy this really cool interview with Ryan Carr, number 82. Here we go. Hello and welcome to the Andrew Hines Real Estate Investing Podcast. I have Ryan Carr on the show after almost a year of trying to get him here. It's going to be a good one. Ryan, you're very established in the construction and investing side of the business. So why don't you just share a little bit of the story about you, what you do, and how you got started, and we'll go from there.
Yeah, sure. Thanks for having me on. I'm super pumped to be here, and I'm glad that we could finally connect. I was actually going through my email, and it's been a year of back and forth and up and down, and we had actually met at Sean Allen's group, I think, out in London a year or so back. And yeah, it's cool to be here. So thanks. A little bit about my story. So for the listeners, Ryan Carr, 33 years old, started investing part-time in 2012 and full-time in 2014. Previously was an auto mechanic, got into real estate sort of by fluke. I had a mass layoff for the company that I was working for. And got into real estate by fluke, did the principal residence thing, did the first rental property thing, got spooked by some tenants, sold it, and then realized a little bit later on, you know what, that maybe wasn't so bad. So jump back in, and now 40 some odd properties later, here we are.
40 some odd. So how many doors do you own right now?
They come and go. So I think I've got mid 30s as far as tenants go, 30, 35 tenants, something like that. And then at any one time, we have between 6 and 10, or sometimes up to 12 job sites on the go in various phases of either pre-development, construction, or post-development, either being turned over for resale or rental ready.
Yeah. Is that, so what's your typical business operation? Like, obviously the rentals are a piece of your business, but then are you actively working as a developer mostly, a constructor mostly, a general contractor mostly? Where is your energy focused?
Yeah, so my energy is focused on finding the deals. So top of the funnel in sales terms, I guess, would be finding the properties so that everybody else underneath that can do what they do best, which used to be, in my case, was construction. I no longer do the construction. I have full-time staff for that. So for me, I really enjoy finding the deals, finding the properties, what can we do with these properties? I really enjoy that part of it. And then from there, I can either pass it off to my team in-house for construction, or I can pass it off to property management, which we also do in-house, or I can pass it off to some of the other subcontractors that we use for various phases of infill development.
So you have a few different employees that are working for you directly?
I do. Yeah. We've slowly built out the team over the last number of years. Like I was saying before, I started full time in 2014 and I was doing it all myself. And that was good because you get to keep the money yourself and you get to learn and you get to, you get to know the ins and outs. But at some point you got to realize like you can scale your thoughts, but you can't scale your physical labor. So you got to get some help from that standpoint. And, what you lose in margin, you make up in volume is I guess the best way to put it.
I desperately need an assistant. I have people that help me on the construction side, but I need somebody that just like never leaves my side.
Yeah.
just put everything on.
Do it. Like, dude, what's the worst that can happen? You hire somebody for 6 months and you're like, you know what? I'm just going to eat the cost for 6 months and try it. And if it doesn't work, then, maybe you part ways, but at least you gave it a go, right?
Yeah. I guess, if my main concern is a lot of it's up here and I have created systems, but I guess I just worry that I'll be wasting money because I won't give them, because like for me, like passwords, like to banking and all that financial control, I don't think I would ever give that up, but I could give up a lot of other things. So really it would just be a matter of me kind of pulling the trigger and actually taking the steps, changing the passwords that I'm willing to give. And then of course, keeping the other ones and just moving forward. I really, right before the whole lockdown happened, I was on the verge. I was starting to look at some resumes, put out some feelers, and then I'm like, okay, no, shutting it down, not happening.
Yeah.
But yeah, like what was your experience like when you got the first one? Because of course I've got my site supervisor on the construction site that I'm building right now, and I have another full-time carpenter, kind of a junior type of carpenter, and then I have my subs. But on the personal side, do you have somebody that's with you, admin, like working with you on a day-to-day basis?
I do. So I have one back-end admin. Her name's Lev. She's been so awesome the last year and a half. I've had somebody working on the back end looking after a lot of I wouldn't call it bookwork. Bookwork wouldn't be the right term. But a lot of the day-to-day, like a lot of stuff that is very important that would soak up your time, but doesn't allow me to get out there and do what I do best, which is finding deals, right? So she's looking after all of we'll just call it back end, in terms of property management and logistics and scheduling and sometimes staffing and things like this.
So she filtering through your emails as well?
Not so much emails. I look after my own emails and I do my own banking. But like, just for example, here's a prime example: opening mail. I get so much mail, it's insane, right? So whether that comes in the form of email digital receipts or in the form of like physical opening of the letters, like just that job alone over the course of a month might take 2 hours. So when you take all of these little tasks that are seemingly trivial for a lot of people, like, yeah, dude, just open your own mail. Well, when you start to multiply that out, that's a full-time position for somebody for an entire year. Right? And that's what I've grown into. So for me, the way that I looked at it when I was hiring the person prior to her and now her was like, okay, if we put a dollar figure, a lot of people think in terms of dollars. So if we put a dollar figure to somebody's annual wage, and I say, okay, this year, it's 2020 now. For anybody who likes to timestamp their podcast, boom, it's 2020. In 2021, in 6 months, I'm going to hire somebody full-time. I'm going to put a full-time wage of X amount of dollars, whatever you think that person is worth to you and your business, right? And just say, I'm going to take a flyer on this. And if it works, I'm going to keep that person. And if it doesn't work, then I've lost my 6 months worth of wages or my 12 months worth of wages. But if you don't try it, you'll never really know. And I think for me, I was in the same boat as a lot of people. Should I hire this person? Should I not? So I took the plunge and I said those exact same words to myself. I'm going to try it. And if I lose the 6 months worth of wages, hey, that's what it'll be. But I'm never going to go anywhere until I can let go of some of these tasks.
Yeah, letting go is a big thing. And I've done a lot with processes, and I think processes are a big part. And when you hire somebody, you need to be able to hand those processes off to them. But they'll only take you so far if you have to work within them. Like I just noticed as I'm like, on this current project I'm on right now, I am driving a lot of product and inventory and just, items through my business that I'm billing back to the client. And normally my bookkeeping is no problem because it's minimal, but when I'm, we're in, finishing stage and I'm just buying a lot of random stuff for the project and just how much time that takes up to keep it organized, make sure it gets billed back to the client, that kind of thing. Normally not a huge deal, but right now I would love somebody doing that for me.
For sure.
But, of course, I'll always want to check in on this stuff. Like I'm very, very particular about my numbers in my books. They got to be done the way I want, but somebody could do the heavy lifting and then I could just check in. Is that kind of how you treat your stuff? Like, does Lynn do your bookkeeping as well?
Yeah, very much so. So for her, she's dealing directly with my bookkeeper. So for the accounting side of things, she's dealing directly with that person. So like I'll put through 5,000 receipts in an annual basis. So to handle 5,000 receipts, like that's a lot of receipts. If you break that down per day, what's that? 10, 20 receipts a day.
And do you have access to your QuickBooks, or you do not? Like you just send the receipts and say, bill back to this client?
I'll write on the receipts if I have them physically, and I'll say, okay, this is where this needs to go. You guys look after the rest. But I try to, there's certain things that I try to be less involved with in terms of the actual tactic or technique, and more involved with the strategy. So one thing that I've noticed as I've continued to scale is that once you have staff and you have tenants and you have lots of properties and things on the go, you can no longer rule by how you would do things. You have to rule by strategy, because that's how you're going to help other people get really good at that task that they're doing for you. Right. So that's how I've changed and how I've grown organically.
Break that down for me. What do you mean? Strategy versus how I would do it?
Yeah, strategy. So for example, if you say to your staff, this is how I used to do this task, they might understand that. But if you give them a book and you give each one of your staff a book that says, hey, this is what I learned from, now you're no longer explaining to them the way that you did it. You're explaining to them how they can learn it for themselves. And a book is infinitely scalable, so they can learn that technique.
So you're talking about teaching the logic behind the process.
Yeah.
So more so than giving them your process, you're teaching them the logic behind the process.
Exactly. And I want them to know my process at least from a high level, because at the end of the day, if they step out, I still need to be able to step in and say, okay, I can take over here, at least in the interim, but I want them to be able to think on their feet. So if you teach somebody, that whole teach a man to fish thing.
Oh yeah. I was going to give you that exact line back. Yeah.
Yeah, that's it. So I want to teach them, because then they can learn. And when they learn, they feel included. And when they feel included, they want to do a great job for you. And I appreciate that too.
Yeah. I 100% am on board with teach a man to fish and fed for life versus give a man a fish, you have, fed for the day. I really, really do believe that. I mean, I think that applies across like everything, politics, our lifestyle. We need to teach people to fish for sure, and garden, plant, all that stuff, and build things. So I'm on board with you there. Now, when you're seeking to, like, this is about growth, right? So this episode, we're going to end up talking lots of things growth. I just think this is particularly interesting at the moment. When we're actually thinking about adding these people, how do you pick a good fit for somebody that's going to help take your business to the next level? So we've got lots of people who listen to this who are doing duplex conversions. They're probably getting to this point where like, okay, I've got a lot of office work now. I've got a lot of back end. How do you find a personality that fits with what you're trying to accomplish?
Yeah, so I think you nailed that. Personality is number one, and goals are number two. So if you're like, I know for me, I'm a really laid back guy. I'm not an A type. I'm not I don't motivate by fear. I'm like, hey, come on and join the family. If you want to be part of what we got going on, awesome. And if you don't, that's not for you, that's totally okay too. And I very much operate like that. I treat my staff with a lot of respect, and I like to give before I receive, and I operate that way. Right. And for me, I think the attitude and the charisma and the things that you bring outside of what you can actually physically do for the business is more important. You can teach people the techniques, as we talked about, but it's pretty hard to manipulate or maneuver somebody's attitude if they don't want to do, and be part of the family.
Well, the thing that I'm fortunate that I've got two pretty good employees. I've had other ones. I've had as many as 4 full-time in varying levels. Like, eventually people, sometimes the attitude goes and they need to go. Other people, like, it's like what you said, very much mutual respect. We treat each other with respect. They know I respect their intelligence and their ability to do their job. And I more troubleshoot with people. I'm like that as well. Like, I'd rather say, okay, well, how do you think we should do this? What's the best way to accomplish this? Yeah. And then, but then sometimes I'll be very firm. I'll be like, look, we can't have this happening because you know how this looks to the client, right? Oh yeah, I see what you're saying. So I try and do that, and I think that overall that works. Of course, you're gonna get some people who just don't want to play ball, right? Like kind of like what you just said. Hey, if you're not involved with this, see you later, kind of thing.
Yeah.
How do you find though that like, do you not find that some people want to know, like, for instance, working for you would be an incredible learning experience for a lot of people. Like a real estate investor to come work for you would be very, very advantageous for them. And I thought about that, should I get somebody who's really interested in real estate? Because they'll really bite into these concepts. But then the catch 22 there is they just want to go do it for themselves. So eventually they'll be like, okay, I'm too busy now, Andrew. I got to go do this for myself now.
Yep.
So good for a while and then it ends. Like, what's your thought on that? Do you try and pick somebody who has a keen interest in the business you're in, or somebody who more just seems to thrive in that position of admin? They like getting into the books. They like being, A-type and controlling the show.
Yeah. So my office manager now was actually column A and column B. So she was into both. She was good at the back end, but she also had a tremendous interest in real estate. And I didn't say to her specifically, but I always think this: if a winner is out there in the market, a winner is going to win whether you help them or not. Right? They are going to win so you might as well be that person to say, hey, here's a hand up. Let me help you get there. Mm-hmm. And I've had a lot of people over the years help me. Obviously, I'm very good at helping myself and asking the right questions and all of these things. But at some point, somebody's got to say, "Hey, Ryan, come on up. Let me pull you higher." Right? And that's what I try to do to my staff. So if there's somebody that has a keen interest in real estate or construction or accounting or whatever, and I can help them and they want to be part of the team, I'm so on board for that.
Yeah, that's absolutely great. I mean, I guess. So my follow-up to that is, have you had a lot of people leave you, and was it still, when you look back at it, was it still worth it? Even though you're training them again, you're having to train their replacement. Would you have changed anything about that, or you just see it as worthwhile?
I'll tell you, I haven't had a lot of people leave me. My retention's pretty good, truthfully, because of the systems that we built. But I can see how that may happen. I mean, people say, I want to come and be a wholesaler for you, or come and be a bird dog for you. I'll work full time, right? And like, okay. And then they come on board, you show them your systems, and then they say, well, I think I'm better off to go somewhere else rather than working for you. I'll do it on my own. And I'm like, hey, you know what? That's okay too. And people have come and gone, but as a general rule, my retention's pretty good. And you know what? Truthfully, if you trained a wholesaler, and then that wholesaler worked for you for a number of years and then left to go and do it on their own, they're probably going to call you because they know that you're legit. And maybe they don't have a buyer's list built out yet, and they'll call you first and say, hey, Andrew, I got a deal.
I love that attitude, because as the people who listen to this podcast and watch know, like, I just give everything away. Like, I'm not charging for it. So far, I have not once monetized this podcast. Yes. And maybe one day I will. I'm not ruling that out, but it's funny. I've made money because of the podcast, but not from it. And so I'm grateful for the opportunity just to connect with the people and kind of spread the love a little bit, share the wealth of knowledge in that way. Because all these guests come on, and you know what, things come back around. So I really like that attitude, and I can definitely resonate with that. But I get, this is me coming from on the personal side, just haven't hired out. Certainly on the construction side, because I was never any good at that. I couldn't have framed by myself. I needed to watch YouTube videos, ultimately. Watched YouTube videos, framed a basement, hung some drywall, but I was always depending on people who were smarter than me with that stuff. With admin and with processes in the office, like I studied business, went to business school. So it's a blessing and a curse, because I know exactly how I want things done. So now it's about figuring a way to fit that with somebody else who might be an A-type that wants to take control too, right? They kind of need to be an A-type to run the show inside of an office, don't they? Sometimes. I think it comes down to your staff too. I mean, if your staff is led and motivated by that type of a person, and they need a go-getter at the helm, then put the A-type in that position. Sometimes people don't resonate with that. But I think you kind of have to build that organically. So just see what fits with that role in my organization. And very much so. I love how this turned into a coaching session. Yeah. You know what? We just keep this stuff fresh. Like it's fun to not go on these podcasts and be scripted and, just kind of let the conversation meander, and wherever it ends up, it's great. Also never happened. Never done a scripted episode. I actually had one guest come on and he's like, I have all these things I want to talk about. I'm like, why did you do that? Please don't do that. But he insisted, and we still had a conversation, but he had to get those points in, which is, that's okay. Yeah. So from one of the things I was impressed with, from you when I heard you speak, one, you're a great speaker. It seems like you had a formal education, and you had presentation experience, which I'm sure it kind of happened organically. No, just whatever. No formal presentation experience, just giver. Just give her. Okay.
Just get up there and be genuine. Yeah.
Came from working in auto tech,
Yep.
and now you're doing this. You understand a ton about development, which I think I mentioned to you at the time. I'm like, I rarely speak with another investor who's dug as deep into real estate development as I have. I need to start hanging around people like you more, because that's the big ticket item. I feel like when you get into development, that's the one where you'll probably take a lot more swing and misses. But when you connect and when you make contact, the payoff is a lot better. Do you mind telling me about some of your development experience, what you've gotten yourself into, and what those have looked like from a profitability standpoint?
Yeah, sure. So the most recent couple builds that I've done were some semi-detached homes and then some duplexes. So you may have heard in the past people talking about my vertical split technique, which is where I take a duplex and cut it up and down. So almost like two townhouses, as opposed to basement and main floor. And
so you'll take a single family and turn it into like a semi-detached or a front back duplex?
Yeah, effectively. Exactly. So I've done that in terms of renos, but I just finished doing one in new construction as well. So,
so 2 units in total or 4?
2 units in total in this case.
Okay.
I did some semi-detached homes, which was a separate project, 2 single family detached. Mm-hmm. And now I'm doing some duplexes. And then we've got some low-rise multifamily coming up as well. So I'm proposing a 30-unit condo. I'm proposing a 6-plex. I just picked up some land the other 2 weeks ago. I'd like to do a pair of triplexes there, maybe a 6 or 8-plex, depending on how the zoning plays out. But yeah, we're busy.
Okay, so let's talk a little bit about those more. So a lot of people on the podcast will be familiar with taking a single unit, turning it into 2. Obviously, the bylaws are very friendly for that. That's development light at this point because most municipalities are just like, it's a permit, all you have to get. However, when you want to take a piece of land that's zoned single family, and you're talking about building a 6-plex, presumably, is that a single family land or is it zoned something else?
This one has multi-zoning.
Multi-zoning. So are you within your zoning right to turn that into a 6-plex?
I am. In this case, I am. I mean, I've gone through the rezoning appeal process before to rezone something from one zone to another so we could build something different. But in the terms of this particular piece of property, let's just say we're building a 6-plex. The property itself is already zoned for that. So it's in Oshawa. So in this case, in Oshawa, R5 zoning is effectively multifamily zoning. So when you work out the frontage and the depth and the parking and the density and things like this, that's how you can come up with the final number of unit count for what you want to build.
So they'll give you a number of units per hectare that you're allowed to build?
Exactly. So that's typically between 65 and 85 for an R5. And then when you get into some of the more denser areas in town, like the downtown core, you can see 150 to 300 units per hectare, which would be your high rise.
Yeah. So for anyone listening that's trying to figure out how to do that, look up your local municipality's zoning, start playing with, like London, for instance, has a zoning map. You can go around, you can click on the different properties. You can see something, zoned R9, for instance, and that might actually have 100 units per hectare you can do. So if you have 1 hectare, you can build 100 units. The more dense an area is, the more units per hectare they're going to allow. Now, when you want to go redo a zoning, Ryan, does it need to be appropriate? I'm asking the question here with an answer in mind, but tell us a little bit about kind of figuring out if something's even worth taking on. Like, should anyone, just Joe or Sally listening to this podcast, try and do something like that?
Rezoning is pretty intense. I mean, it's capital intensive. It's slow. It's like every government appeal process you can imagine. One thing that I do, and to play on your last comment, was go to Google and type in like whatever your city name is and interactive zoning map. So in my case, it would be Oshawa interactive zoning map. And it works for Peterborough or Belleville or Sarnia, London, whatever. And I mean, your interactive zoning map will pop up and give you so much information with respect to the zoning. But to rezone a property, like it's a lot of work and it's a lot of risk too, because you get every neighbor coming out with the with their own opinions and they have a right to their voice.
Right. They have a right. You're going to affect, the not in my backyard mentality comes out. That's right. This is where you need to schmooze your neighbors if you're going to do it. But I mean, in London, they really stress appropriate development.
Yes.
And I've run up against a wall for that.
Yeah.
I know other municipalities are a little bit more flexible on what is appropriate, but in London, they specifically told me if you're in the middle of a street and you've got a bunch of R2 zones all around, and say you're R2, and you come in and you ask, well, I want R4, so R2 only allows 2 units, R4 could allow many units, but let's say for 4 units. For 4 units, you need R3. So say you wanted to go to R3, they would tell me, well, no, that's a spot rezone. Yes. And it doesn't conform to the rest of the neighborhood. No, we won't do that. But what we would consider is if you rezone the entire neighborhood. But then the entire neighborhood has to be okay with going to an R3, which means they're inviting all other developers to come into that neighborhood and start knocking their houses down and building triplexes and fourplexes.
Yep.
A lot of neighbors would be like, what? No, you're not doing that in my neighborhood.
That's right.
So there you go. You're inviting the neighbors in to give their comment. And a lot of them are just gonna be like, no, because people don't like change, right? They're not benefiting from it. I don't know. I guess you could kind of grease them a little bit and say, well, if you vote this way.
Grease every neighbor in the subdivision. Yeah.
It might get expensive if you have a budget for that.
It would.
But here's the problem with that is if all your eggs are in that basket, you buy that. And your plan A is if I get this rezone and I get this development and I can do this, then, and if everything goes right and all I get, every possible if turns out the way I want it to, I make a few $100,000. That's a losing proposition, because I would think in that type of a scenario, what I just described, you're more likely to fail than succeed. Far more likely. The
downside's higher than the upside for sure.
Yeah. And then, if you don't have a plan B, this is where my whole plan A, B, and C thing, I always talk about having a plan A, B, and C, because I've been burned. I was trying to do a duplex from a single family and got burned with a heritage control bylaw and an interim control bylaw. They stopped me with an interim control bylaw, and then they passed the heritage control bylaw to just completely nix my project. And I ended up having to hang on to that property in a loss position after spending like $20,000 in soft costs to develop, paying too much for the land, paid too much for the house, all the things you don't want to do. And this was 2012, 2013. I was pretty green, and I didn't think my contingencies through. So, what's the best way, Ryan, if people want to start learning more about development and just for our listeners, development is when you're taking something and you're changing its use. It's single family, you want to go to multiple units, 3 units, maybe you want to take residential, go to commercial. That's development. What's the best way for people to kind of learn more about this and start maybe making inroads towards being able to do it one day?
Finding somebody that's already doing it is a huge way to go. That's what I did. I don't come from a real estate background. My family isn't involved with real estate. I'm a mechanic. So everything that I've learned, I've learned by way of just being a sponge and soaking it up. So I would say, do your research online, do what you can do, find somebody else that's doing it, and get as much information as you can from them. Infill development is like one of those things where a lot of people don't talk about it. It's like this hush thing. It's easy to find information on basement apartments, but I mean, in terms of that, it's harder to find. So find somebody that's doing it. I'm also writing a book called Highest and Best Use, and you could read some of the information in that book as well. I'd love to have people out. Maybe we can link it up in the show notes, and you can check out that book too.
Is it available already?
It's coming out in spring market 2021. So people can sign up at thehighestandbestuse.com.
We'll put that in the show notes. Highest and Best Use?
Thehighestandbestuse.com.
Pick one of those development projects that you have a fairly good gauge on the numbers, and let's walk through what you saw, why you bought it, what you expect to profit.
Okay. Just so I know, for your listeners, are they mostly on like the duplex conversion side so we can resonate with the 2 unit, or do you want me to go bigger, low-res multifamily?
They've heard a lot about duplexes, so I'd love to give them something different, because we have a lot of people who have done those duplex conversions.
Got it. Okay, so then we'll go low-rise multifamily. I think there's a lot of opportunity here. So for a project like that, you're going to be looking for a few things. You're going to be looking for frontage, you're going to be looking for depth, and you're going to be looking for density. And in the case of that, those 3 things are effectively what will give you the way that the site performs, and also how many people will live there.
Let's clarify that a little bit. So you're implying that you're looking for a piece of land that's already zoned.
Yeah, in this case, I would to simplify the process. If you want to talk about rezoning, we can do that too. But
let's not go there yet. Okay, we'll get into that if needed.
We'll go as deep as you want.
So for frontage, anyone wondering what that means? Frontage is the number of feet of width you have fronting on the street. So how wide is your lot? against the street. That's what the zoning department is going to be looking at in combination with the depth of your lot. So a lot, where I live right now is about 150 feet deep by 50 feet wide. And density. So then you would be looking at your zoning, whether you are R1, R2, R3. Every municipality has different designations for their zonings and different definitions for what that zoning allows. So you have to look at it at your individual. But we'll speak in terms of yours, Ryan, where you're working in Oshawa. Okay, so what are you looking for? If is this something you're looking for right now? You obviously did just pick up something to be a sixplex. So you found a piece of land. Tell me about how you found it and how that went.
I did. So this was an off-market deal, kind of a quasi off-market deal, actually. I was doing a renovation about 10 doors down a few years ago. And every time I move into a neighborhood, I'm always checking out where some other opportunity may be. And in this case, there was a fairly good-sized parcel of land with a fixer-upper home, looked to be like 1900 to 1930 type construction, like the stone foundation type of vintage, right? So I threw a flyer in the mailbox and I said, "Hi, I'm Ryan. I'm renovating up the road. If you guys are looking to sell, I buy without commissions," like the whole story. Mm-hmm. And they got back to me and they said, "Well, we're not really interested right now, but maybe in the future, I'll let you know." So a couple of years go by, and you never know when these people are going to reach out, right? When you drop a flyer, drop a note. A couple of years goes by, and they call me and they said, "Hey, now's the time. We're interested in selling. We're actually using a realtor. So if you want to come and check this property out, you can go through them." I said, "Okay, well, let's explore this." So I ended up calling the realtor, or the realtor called me, and they said, "This is what we're looking for, and this is the size of the lot, and we're looking for a really clean deal, and my seller doesn't want people coming through the house. She just wants something simple." Great. The numbers worked. I was happy. The seller was happy. So we picked this up, and I actually renegotiated a rent back from the seller because they didn't even necessarily want to move yet. So I said, "Well, look, how about I buy the place, you can cash out, rent it back for 6 months to a year, and when you're ready to find something else, then you can leave. And in the meantime, I'll get my permits," right? So you don't have any carrying costs. When they leave, you take the house down and boom, put up your development project.
That's brilliant. So that's a way of working a deal out that kills two birds with one stone. It was a benefit to them, huge benefit to you, because one of the biggest things with development is if you're sitting there burning money, on your mortgage payment and you're paying high interest, it just makes it that much harder to pick up a deal or want to pick up a deal because of all the burn before if you're even going to be able to develop it.
Yeah.
What was the frontage of that place?
This one was 66 by 140. 66 of frontage, I think 140 of depth, something like that.
Okay, and what was the zoning?
The zoning would be low-rise apartment.
Oh, so it already had that. Did they know that they had that kind of zoning?
They did. So their one neighbor to the one side already had a low-rise, like a sixplex or an eightplex, something like that. And then the neighbor to the other side also did some redevelopment as well. So they kind of knew that they were going to be in the area and in the market of a developer type of person looking to buy this property. And in this case, that guy happened to be me.
Lucky guy.
Yeah.
Well, not lucky, right? You're intentional, and you're taking the steps to be successful. I shouldn't say the word lucky. There is a little bit of luck, but luck is where opportunity and what's the other thing? Opportunity meets preparation.
There you go.
Okay, so your zoning was for low rise. Did that zoning allow you to build without any minor variance needed? Meaning, are you in full conformance with that zoning with your proposal?
I could be if I dropped the density and reduce the parking a little bit, or increase the parking a bit. I think we're going to push because the answer is I want to push for a minor variance, because when you push for a minor variance and you're already in zoning compliance for the overarching zoning, but you got a couple tweaks that you can really drive the value. I'm a big believer in good deals are found, great deals are created. You may have heard me talk about that before. And in this case, a minor variance, which is like $1,000 in the city of Oshawa, and a little bit of thought and creativity on the way in is going to yield some better results. So for me, would I be in compliance with what I want? Technically, no. Could I be in compliance with something of a lesser building? Technically, yes.
As a plan B, does the being in compliance work if your minor variance gets shot down?
Yeah. So as a plan B, I absolutely would be in compliance.
Okay. So you saw an opportunity here where you have a tenant. You said, if it takes me, it shouldn't take you 6 months to get a minor variance. What, like 3?
Couple, yeah. Handful.
Yeah, okay. So you gave yourself a 6 month with them. You could pretty much have all your permits in line, ready to go, ready to break ground as soon as they move out.
Yeah.
That's the way to do it.
Which is quick, dude.
And you're not burning money.
Yeah.
Right?
For anybody listening, like 6 months to get a permit when you're already in basic zoning compliance and a quick variance, like that's quick.
That's
quick.
So is that what you expect, or you're thinking it'll take longer?
Here, I'm hoping for 6 to 8 months.
Okay.
But I just went through a brand new duplex build in a town just east of Oshawa, and it took me 2.5 years to get my permits. So
why? Just not in conformance? You were non-conforming?
No, I was totally conforming. I got stuck in an interim control bylaw as well. So they halted developments, and then there was some problems. Then I had to wait for a bunch of different studies to be done, and it was a bit of a mess. But not the sidetrack from the low-rise apartment building.
No, but that's important information to be aware of, because everybody thinks it's all sunshine and rainbows. Maybe they don't. Maybe they're too scared. But these are the things that actually have stopped me, because I tried development very early, and then I kind of took on the mentality, I want to go after deals where I needed the least people to say yes. Like, yes. What was the path of least resistance? If I was going to have to get a yes from all my neighbors, everybody within 200 meters or whatever it is, less inclined. However, if it's something like a minor variance, basically when the committee meets, they're really just looking to satisfy the question, is this minor in nature? Yeah. If it's minor in nature relative to the zoning. So anyone who's not familiar with minor variance means, is this specific thing you're requesting? So say the zoning requires 6 spots and you can only have 5 based on the land you have, you would need a minor variance to have 1 less spot. So odds are, Ryan, in your experience, if you needed to just have 1 less spot, is that something likely to get approved?
In this case, yeah, it would be.
Yeah. Okay. So what is the actual minor variance for you that you need?
For me, I'm going to be slightly over density.
Okay.
I'm going to be considerably under frontage, right?
What's the frontage requirement?
Well, in my case, the zoning bylaw in Oshawa hasn't been updated for like 20, 30 years. Okay. So as per the current zoning, it would require like 25 meters of frontage, which is like 80 something feet.
80 feet, yeah.
Yeah, I'm 60 feet.
So you're 66. See, yeah, in that case, they would have to say, is it minor in nature? What are the other criteria for a minor variance? The big one is it minor in nature?
Yeah, I forgot there's 3.
Yeah, I forget the other ones.
Does it meet the intent of the original bylaw and something else?
Something else. Okay.
Yeah.
So in this case, are they going to argue that the bylaw is inappropriate? Because if they did, then they would be their prerogative to change it. So in this case, they're going to come into that meeting and say, you're asking for 80. This is 66. Does that still fit the definition of minor?
Yeah. So the answer in my case would be most likely. And I mean, I can't speak on behalf of the committee, but in my case, most likely they're looking to intensify the city, and they know that the zoning bylaw is outdated. And when people like myself come in for these requests, they go, oh, another one. We totally get it. We totally know where you're coming from. Let's see how we can work to streamline this process, because we need infill development, and they want to see that intensification. They want to see new construction taking place in the city. So they've got I think they call it a pecuniary interest in having people come into the town so that their tax bills benefit and their shopping benefits, and people use the same transit systems and stuff like this. They want to see it. So they're a little bit more flexible in a minor variance as opposed to a rezoning application.
Very cool to know. And for anyone listening, the only way you're going to know that is if you go speak with your city officials. Like, yeah. I mean, right now it's a little hard with the lockdown, but get on the phone with them. Every municipality is going to be different. In London, I've found them to be a little bit difficult. But of course, there are going to be other places where they're growing. They know they're growing. They know that they don't have nearly the density of housing that they need. So they're a little bit more fast and loose, and they'll allow things to fly through. Now, sure. In this case, you could still have neighbors come out and say, well, that's not minor and we don't want this. What happens in that circumstance? So
if you go to the LPAT, which is effectively the governing body for people who do or do not want a minor variance or a rezoning application to go through, or some type of land planning tool. You can go to the LPAT, and it used to be called the OMB, and the LPAT effectively governs what people can or can't do. They're the final stamp on whether or not a variance or a rezoning application will get approved. Now, if the neighbors come out, and you're both standing there right at the lectern, and you're kind of going back and forth on whether or not you should be right or they should be right. If they're right, and they take this to the LPAT, and you lose at the LPAT, then you can't move forward. But if you win at the LPAT, which is court, right, you can put a lien on their house.
How do you mean?
How do you mean? Well, it's effectively court. So just like provincial court, if you win court battle, they have to pay you. It's a plaintiff.
Well, they have to pay your legal fees.
They have to pay a bunch of stuff.
If they take you to LPAT, so if they're that staunch on stopping you from developing,
yes, they lose. Yeah, that's right. So that's a feather in the cap of the developers who are doing this legitimately with the intent of other people and new residents and a proper development in mind. I mean, if you go to the LPAT appeal and the neighbor says no, and you say yes, and you win, you can sue them. And if they can't pay you, you lien their house.
But in this particular instance, if their argument was it's not minor, therefore it shouldn't happen, is the LPAT really in a position to argue with that?
I don't know. It's a court appeal process, right?
So really strength of case is a big part here, right? Like
they can appeal anything. They can appeal,
exactly. They can appeal anything, right? Whether they have a valid argument or not. 6 inches of frontage would be stupid, but they could. And then if they took you there, I mean, at that point, it'd be great to just go talk to them and say, "Do you really want to do this? Because you know you're going to be paying my legal fees."
That's effectively how it goes. That's how it goes. And that's why, dude, like when I go and do these developments, or even a minor variance for a basement apartment, like when I go and do these developments, I go to every neighbor and I say, "Hey, I'm Ryan. This is what we're doing over here. If you have any questions, please come to me first so I can address those." Like if everything about my development is great, but you don't like that I'm using a 5-foot fence instead of a 6-foot fence, and like the extra foot of fence will be better for you because you got a trampoline and kids in a pool, dude, I'll just put the extra foot of fence on. Like we don't need to go to court for that. Let's just have a conversation like normal people. And how can I help you? If you're going to have a long-term view and you want to make sure the neighbors are happy, I always take that stance. Always.
You do that with your rental properties too? Like if your neighbor says, "Hey, we want to do a new fence," and you have no desire to do a new fence, do you just do it because they're your neighbor?
Yes.
Okay. Smart thinking.
I do. I think if you put like if you have to quantify this with dollars, like if that's your speed, an upset neighbor is very expensive compared to a cheap fence.
Yeah.
True. Like the guy's calling the bylaw on you all the time, or there's something with the tenants and where are the tenants throwing their snow, and like the phone call and the mental gear changing to get that guy back in line and on your side again is so not worth it than to put in the $2,000 fence.
So just pay for the fence.
Just split it like the neighborly thing to do.
So I like to, any simple thing, I always like to. Fences have just bugged me because I find them useless on my student rental properties. Mm-hmm. Like the tenants don't want them. I don't want them. Like I literally just find them actually pretty much just an inconvenience because now they restrict my access. But like you said, if it keeps the neighbor happy, maybe that neighbor will one day sell me their house. So,
perhaps.
There's karma. I think it goes back to karma, and also just making your life easier, right? Like you said, it's not worth an unhappy neighbor because they could cause so many more problems, especially in your business when you're
go ahead.
You're doing projects where your neighbors are constantly being basically requested to give input, and it's not a good thing if they don't like you.
It's not. I've had neighbors offer to cut my grass and shovel the snow, and I saw that you guys are building here and you didn't do the sidewalk, so we salted for you. Like just stuff like that. It's like, oh man, thank you so much. Really appreciate that.
That's awesome, man. It's such a great perspective to hear you talk about this stuff, because everyone has a different approach, right? And obviously, you're getting a lot of deals done. Like, talk to me how this happened. Like, you were working as a mechanic. Actually, before we get off track here, let's just go through these numbers a bit more. I do want to go back to being a mechanic and getting into this, but so you're considerably lower on your frontage. You're expecting that to work. You might go to LPAT. If it does go to LPAT, how long is that going to take you?
I don't even know.
Could be a couple of years, right?
A couple of years. Yeah.
Yeah. At that point, you would just keep renting it out. Do you have it financed privately right now?
This one I'm going to finance through a commercial brokerage. I'm doing a lot of deals with these guys lately. They've been very good for me. So it won't be private funds, but it won't be rock bottom A-lender rates either. So cost is definitely something to consider. So
you're at a negative cash flow position right now, or did you close in cash on the place?
I didn't. I could, but I won't. I think because I've got the tenant in there, we negotiated, I think it was like $1,700 a month in rent. So, I mean, in terms of a conventional carrying cost, by the time you pay your taxes and somebody to manage it and stuff like this, would it be negative? Yeah. By the time you factor in the principal recapture on it though, you might be roughly buoyant, give or take a few $100. But I mean, it's better than losing $2 or $3 grand a month. Just being
that's a small investment, right? Like there's a certain amount of money you're going to be willing to risk for the big win, right? Being able to create the sixplex.
Yeah.
Okay, so you haven't closed on this one yet.
No, it closes in 3 months.
Okay, so you just tied this deal up then, more or less, or has it been a little while ago?
That's right. So it was fairly recent, a couple of weeks ago.
Okay.
I tied it up with an extended closing, knowing that these people didn't necessarily want to move, and they didn't really know where they're going to go. But one thing I did, the reason I extended the closing, A, I didn't need the property, but B, I found out, and I assumed first, but I eventually found out that their mortgage payment was less than what my rent would have been. So I said to the agent brokering this deal, okay, let's get a little creative here. Why don't I close in 90 days? Because I don't need it.
Mm-hmm.
They continue to pay their mortgage, so they're breaking down their principal, plus their overall payment is less. And then in 90 days, then we can cash out, and then we can move forward with the deal. What do you think about that? And they said, hey, that's great. Why would they pay you rent when you don't need it, and they don't want to pay the increase in fee, keep the cash in their pocket? So again, it's just another way for everybody to win in that situation.
Yeah, and I'm super on board with that. That's a great idea. Why not push it out a year then?
We could. They want it to be liquid.
They want to be liquid? Okay, yeah, because I mean, with my building permit stuff, I would try the best I could to push it out far enough that I could get my drawings done up and I could get my permit in hand. So I would write it right into the offer that I had permission to go get a permit, and then I would take that to the city and submit it, and I would have permit ready. Sometimes before I even closed, they give me an active permit, which is cool.
Exactly.
So basically it's just liquid. So if you could have, would you have done it in a year? If they said, hey, we're cool with that, you would have done it that way and invested the money in the soft costs to go forward with the development?
Yeah, I could have. Absolutely.
Yeah. Would you ever worry that you're going to invest that money and get it to a point where it's ready to be developed, and then they don't carry through with the sale, and then you're left suing them for your damages? You ever worried about that, or not really?
Yeah, I mean, long closes contractually, I mean, you're obligated. So on a long close, I would be doing like the quarterly check-in, be like, hey, you guys need anything from me? I would be doing the quarterly check-in on a personal level, and I'll also be doing it on the legal level from lawyer to lawyer, because people don't talk to lawyers, only lawyers talk to lawyers, right? Mm-hmm. So I would be doing it on the personal level with the people in the house, because that's really where it's all driven. And then the lawyer side, they'll look after themselves, but definitely regular checkups.
Yeah, just to make sure, hey, they haven't changed their mind or they're not thinking about doing something stupid.
Yeah, and I mean, like at the end of the day, they can't. You pay your deposit, you've got the thing, you got your contract, everything's tied up. But yeah, it's getting into a legal battle. Nobody really wins, right? It's like trying to get a tentative. Yeah. Nobody wins. It's horrible.
I remember, in business school, I did take a business law class, and he's just like, the best way to win a lawsuit is to not have it. Mm-hmm. Don't have it. Like, 100%. Just talk to people, just be reasonable with people. There's always a way to come up with a reasonable solution, which is, I've tried to take that into everything I do. I remember what he said, and always dealing with anybody, even a bad employee. I never burn bridges with subcontractors. I just say, hey, let's be reasonable. There's nothing for either of us to gain here by not being reasonable with each other.
I put that right in my leases with my tenants. I said, I'm a big fan of the be reasonable policy, and this is what this means, right? And if this doesn't sound reasonable, it's probably not reasonable. And if it does sound reasonable, it's probably reasonable, right? And they go, oh yeah, that makes a lot of sense. I'm like, yeah, just enjoy this house, and I'll be a good landlord. Call me if you need something. Done.
That's smart, man. Very smart. Or call your admin if they need something.
Yeah, don't call me. I won't pick up. No. I do pick up. That's the thing.
That's where you get really busy. I try to tell people, email me with maintenance requests. Sometimes they do still text me. No problem with that. I will if it's something more specific. I'll be like, just send me an email reminding me, because otherwise I'll forget.
Yeah.
Okay. What'd you buy the place for?
Which place?
The one that you're going to turn into a sixplex.
370. I'd have to check the purchase. Called 370.
Okay, so you're figuring 370 purchase price, and we're going to have some carrying and soft costs. Probably $30,000. You're figuring if things go as planned.
To build it, 30,000.
No, just carrying costs and soft costs like mortgage, interest, blueprints, all that stuff. Actually, if you want to just give me a total cost, everything, build it, develop it, all the soft costs to develop, all the costs of building, you can do that too. What do you estimate?
Yeah, so I haven't done a full pro forma on this one, truthfully. I know that the land cost is right. I know it's very, very right.
Okay.
I know that's been good. In terms of what I actually can build, I mean, I could go with a pair of triplexes. I could go with one sixplex. Or if I'm really lucky in terms of my variance hearings, I'll get either a pair of fourplexes or an eightplex. Right. And the way that, and I'll tell you why. the way that we're doing this in Oshawa and some surrounding cities right now is mutual driveways have made a comeback. And I'll say it again. Mutual driveways have made a comeback. Somebody made a case very recently, like within the last 24 months, to build a pair of triplexes on what would effectively be a duplex building lot. And he said, why don't we do a mutual driveway down the middle with parking in the rear? Because let's face it, this isn't the 401. We're talking about six tenants, 6 cars. And then council went, yeah, I guess you're right. Why take up double the land for double the driveway when we can use one driveway for the same purpose? So we're registering an easement up the middle of the building, doing a left, doing a right, and then parking in the rear of the property. It functions amazing, right?
But that would be severed lots, right?
They would be 2 separate lots. Generally speaking, the same owner is going to own both halves, but you could parcel one out if you so chose.
So in your process here, if that works out, you will be getting a subdivision of the lots. They will be subdivided.
Yeah, if I want to put 2 buildings on that lot, I'd cut it in half and do 2 separate titles. The challenge with that becomes you're going to have 2 tax bills. Yeah. So one sixplex might be, I don't know, I'll just pick a number, $10,000 tax bill, right? But 2 triplexes might be $6,000 each.
Right.
So you're going to eat a little bit out of your cash flow, but I think you win on the equity side.
Okay, so let's just dig into some hypothetical numbers. If you were to do the sixplex, just one sixplex, so you'd be I'm just trying to figure carrying in soft costs, like you'd be borrowing potentially eventually you're going to borrow more money for your construction, but most likely. So let's say carrying in costs, like $100,000 over the course of a year and a half, 2 years to do the whole thing, or a year and a half, probably start to finish from when you close to when you're done.
Yeah. Put me on the spot here. This is tough.
It gets harder. Yeah, it gets harder. We haven't done a lot of development numbers. Like I'm very back of the envelope. I know you are too. You have the little napkin.
Yeah. I'm a napkin numbers guy. So look, here's let's take this more general. What I can tell people is that if you're going to build $1 million building or a $10 million building or a $100 million building, your expected net is 10%. That is on average 10 to 15% what somebody could expect if you bought the land right. And only if you bought the land right. That's what you can expect. Yeah. Ballpark.
So 10% net, and you're saying in equity? Like, so market value of that sixplex is when it's done, what do you say the market value would be based on today?
Sixplex. Okay, it's going to come down to a cap rate multiple on the rents.
All right. Well, we can do that. I got that sheet open right here. So, okay. Let's work out our rents. So we're going to have,
I better get comfortable here. We're going deep. Okay.
We're going to have what, 1,500 a unit on average, or 1,700, you think?
Okay. So let me see. If we say 1,500 a unit times 6 units, it's 9,000.
Yeah. Vacancy 2% or something.
9 times 12. Okay. I'm going to do it different. So 1,500 a unit times 6 units times 12 months is 108,000 gross rent.
Yep.
I'm going to take CMHC is like 35% of off your gross in terms of expenses. So we're going to multiply that by 0.65. So you're going to have 108,000 times 0.65. You're going to have an NOI of about $70,000.
Okay, so yeah, real shortcut Ryan took is just estimating 30% of all expenses, including taxes, insurance, maintenance, management, utilities, lawn cutting, all 35. That stuff. Yeah, you're figuring 35%. So then what's left over is 65% of your rent. And if it's 60, right. So if it's 65% of your gross rent, then we're just going to come up with that. Well, yeah, 70,200. So right. Then
I just want to jump in here. 35% would be it's light. Truthfully, on a resale building, you could be as high as 50% expense ratio.
Yeah.
On a brand new building, because some of your maintenance and repairs and your CapEx is already done, you could go a little bit tighter. I'm just using numbers that CMHC loosely puts out.
Sure. Okay. So if we wanted to get it, like, what are you going to be, a 5% cap rate or a 4% cap rate on that?
Brand new building is probably going to be a 4 cap, but you can use 5 to be conservative.
So what will we be? So if we're maybe
about 0.05, it's a value of 1.4 million.
1.4. Okay. Yeah, so 1.4 is 5.01% cap rate. Anyone wants my spreadsheet to calculate all this stuff, it's just andrew-hines.com/cash flow. Okay, so first mortgage, when you refinance, just so we understand what the cash flow will look like, you're going to probably get 75%.
Well, if you go CMHC, you get 85%.
All right. So let's just say you win 85%. 20, what amortization would you do?
It's a brand new building, so you can get 40.
40.
Yeah.
Okay.
Pretty
And you're probably going to get like a 2% interest rate based on today's rates.
I just got a mortgage on a 14-plex that we just finished at 1.9%.
Okay,
Free money, people. Free money.
1.9. So was that CMHC?
That was CMHC. Yeah.
So CMHC Insurance, I'm sure many people who are listening know this, but CMHC will insure multi-residential buildings, and it's a very expensive fee. It's like 5% or something like that. They tack it on to your mortgage. So so if you're getting 85% loan to value, it's actually really 90%. So if we really wanted to work that out, it would actually be, you'd have a mortgage payment on that of about $3,800 a month. You'd have about $2,000 cash flow, unless your maintenance and all that stuff ended up being higher. Okay, so we ultimately did that exercise to figure out what the building would be worth about 1.4 million. So now that we've gone through that exercise, so 1.4 million. If you were going to sell it, then we would subtract off what it cost to buy it, which would be the 370,000. Your soft cost and build, what are you thinking? Like, would be 200 a square foot to build that thing, and you're probably 1,000 square foot a unit.
Oh, geez. Okay, so I'll tell everybody up front, I am not a fan of doing a per square foot cost calculation. I don't feel and I get asked this probably 5 times a week. I don't feel it's a fair justification for the cost of actual construction, because servicing and development charges and development credits and location and subsidies and things like this, carrying costs, it's just, there's so many moving parts.
Oh, I agree. Okay. I was just asking for the actual the raw construction part. Yeah. Sure. Development charges, all that crap on top. Yeah. Ultimately, I'll edit a lot of this stuff out just so we're just talking about the points, because otherwise it'll just be too much. I'll try and simplify it for the end product here.
Okay. Just use $250 a square foot
for construction.
I'm talking all in.
You're talking
construction, DCs, carrying, a builder's risk policy, like all that stuff.
250. All right. So, and then figure 1,000 square foot a unit?
Probably slightly less.
All right. 900 times 6. So, okay. So based on 900 square feet, a unit being 250 square foot, 250 a square foot, all costs in, including carrying costs, that would actually be 1.350. So based on our conservative estimate of a value of 1.4 million, that wouldn't be profitable. So in reality, what I think would actually happen here is this is not going to go for a 5 cap. It's more real.
I know.
Yeah, you're more reasonably going to be closer to a 4 or even less, I would think.
You're going to be a 4 cap. You're going to be higher rents. You're going to be a bunch of things.
Yeah. So basically there's a lot of reasons why our numbers don't show profitable here. But you're saying your model was, okay, we're going to get 10%. So if you were 1.4 million, you'd be expecting $140,000 in profit if you were to sell that property.
That's right. And truthfully, I'd expect a little more out of it than that.
So just really getting in, this is what I wanted to know. Yeah. When you saw this, you knew it was a little bit of a battle. You looked at that property, you probably did a quick back of the envelope. Okay, this will probably be worth 1.5, 1.6 or 1.8 even when it's done. I'm going to get maybe 180,000 to 250. Is that what was going through your mind? Or I don't want to put words in your mouth.
Yeah. So I think up behind me, that one right there, that sign, what's the upside potential and what's the downside risk? Yeah. So all throughout my entire office is all these different quotes that I find motivational, and I read them every day, right? And when I was looking at that property, R5 zoning is effectively good for a number of different things, right? Apartment building being one of them. But my upside potential would be multifamily. My downside risk would be 2 duplex building lots or 3 townhouse lots, all very, very streamlined and simplified to get. Yeah.
And you've spoken with the city, at least at a preliminary level, to know that they're reasonably on board. Did you have a conversation and they said, yeah, we like the sounds of that?
Absolutely. So I'm in good communication with the city at all times because we have so much on the go.
Huge lesson for people, right?
Oh my God. If you can have somebody that you can call or email or just be in good contact with, and they will give you some good high level advice like, hey, you should watch out because this is bordering conservation, or you know what, I think the sewer system is older there, they don't have capacity for your 8-unit building or your 6-unit building. Or I've been told that the soil is a little bit funny in this part of town, you know, maybe there wasn't as much sand as there should have been, or maybe there was some foamy soil that your building might sink, so you're going to have to double up on the foundation with rebar. All of those things come at a cost. And the more information that you can have on the way into a deal, the better off you're going to be.
Yeah. When I was first doing that first one that I had the interim control bylaw put on me I was in City Hall 4 or 5 times a week. I was there almost every business day talking to people. I have another question for you. I find nothing gets answers like going in and seeing a person face to face. Like, write your answers down, the questions down ahead of time, go in, have run through a couple of case studies. I literally pulled up specific lots. I had lot questions. I'm like, I looked at this lot, it looks big enough. How do you think this would go? Do you think a minor variance would be approved here? Things like that. You have to make sure you ask that question to the right person, because the people in the building department have no clue. They're like, maybe you can talk to them. So depends on the municipality though, right? But you just keep asking those questions and eventually you get the answers you need. Now, if that sounds like hard work, it is. And that's the secret. But as you do it more, you start to learn shortcuts, right? And where you're at, Ryan, you're doing this all the time. So, this is probably a lot easier for you than it was when you started out.
It is now. Yeah, you start to get the right contacts and you start to learn the math. And one thing that I've really picked up on, and this is super key for the listeners, is that not all people actually make money at their deals. And that's something that I never knew on the way in. I'm looking at all these people building houses and doing even apartment buildings. Like if I did my numbers and the end of the project was the way that we just went through on that example, right? I'd be upset with myself because there's no money in that deal, right? Yeah, you're going to get the long-term lift and the upside and the residual, whatever. And that's great. But I mean, if you're going to go and build that building for 0 equity lift and you're going to be into that property for the full amount of the down payment after you're completely done, was it really worth your time and the risk and, that poster? Or would you have just been better off to work on some financing terms and buy an existing building that's already done?
Yeah.
So I'm always looking at that. Not everybody's project makes money.
And this is exactly my thought process as well. So I've looked at so many opportunities to build stuff, and I was evaluating exactly what's on your picture there in the frame. I'll always evaluating what the upside is. I like to do a high, medium, low. What's my worst case scenario here? If in my plan A, okay, that one's not profitable. Do I have a good plan B, or am I just straight up losing $200,000 if this doesn't work the way I want it to? Yeah. And if the answer is I'm straight up losing, even though it's a low probability, for me, where I'm at right now, I'm not willing to take that risk at losing $200,000. Whereas if I could find a way to find a deal where it works very well as a rental property, I'd be happy to keep it, or maybe wait 10 years and develop it, but I can take a crack at it now. And for $20,000 and I'm risking $20,000. That's something I'm a lot more into. Hopefully I don't need to lose 20, maybe 10, but the more I could find deals where there's a mitigated risk, and so I have a crack at development, but if I don't succeed, I still got a good rental property or something along those lines.
For sure.
Do you look for that type of situation as well?
Yeah, 100%. 100%. I mean, people that are out there buying, maybe they bought the wrong property at the wrong time in the market and the wrong whatever. And the market's just sort of inflated, and it's inflated their problems away. So everybody looks like a rock star real estate investor.
Everyone does right now.
Yeah, just like your problems get covered up because of the, inflation is just taking away all the mistakes
happening absolutely everywhere.
And the same thing goes
all
with
over
stocks.
the place.
Same with stocks. People think you're a magician, right? Because you bought the right stock. Well, the market's just going straight up. So like whatever you buy, you're a hero.
Well, it's harder in stocks though, right? Like I always like to make that comparison. Like in stocks, like Warren Buffett says, don't try and play the market. Like don't try and beat the market. Just invest in an index or whatever. Whereas in real estate, like you said, everybody looks like a genius. Oh, I bought that lot down the corner and I did this to it and it sold it for $200,000 more. Warren Buffett is considered one of the smartest investors on the planet and says, no, it's too hard for the average person to figure this out. And the average person who tries to like day trade, they lose, right?
You're smashed. Yep.
But in real estate, it's like everybody's making money and they looked like geniuses because the market. And that scared me. That scared the hell out of me, because I saw how many projects I did where my costs did overrun, but the value just was way more. I was being way too conservative on the value. And then the market went up too. Yeah. And it just gave me a little bit of a dirty feeling. I'm like, okay, I'm good.
Yeah.
But if the market hadn't gone up, or if the market had stayed the same, I would have been very thin on this one, or I might have even lost a little bit.
Yeah. Warren Buffett's the king of buying $1 for 66 cents. And I think that's the mantra, at least for me, that's the mantra that I live out every single day in my real estate business is I need to go out there and buy $1 for 66 cents. I need to go find that house that's worth $100,000 for 60 cents on the dollar, 70 cents on the dollar, 40 cents on the dollar. Because for anybody starting out, or for anybody experienced, A, that's where the money's made, truthfully, right? And B, that's how you're covering your downside risk. So if you win, you're a champion, right? You worked your plan, you planned your work, that was it, right? Mm-hmm. And if you lost and you didn't come out according to plan, you're probably neutral.
Damn, we could go on for hours here. When you were starting here, so you were, what age were you when you bought your first property?
Ooh, gonna make me do math. Okay,
like
so
early 20s?
I'm 33 now, so 2012. That's 8 years ago.
Okay.
So what's that? Yeah, early to mid 20s. 33 minus 8.
Yeah, you would have been 25. Yeah. All right. So you're working full time as a mechanic.
That's right.
And then you didn't have any interest in doing that anymore, or you just saw a profit. You're like, okay, I'm not doing this anymore.
No, man, I got laid off.
You got laid off? Okay.
I got laid off.
You could have gotten another job, but
I could have. So what happened was I was working for this company. I was building handmade luxury armored vehicles. Okay. And these armored cars were based in Markham. I grew up in Markham. And these armored cars were super, super cool. Like 3-inch thick glass, Xboxes, cappuccino machines, full leather interiors, sound systems, like really sweet rides. And we were building these things for like oil money and basketball players and some pretty high profile people. And then what happened was the company itself, the idea was good, but their marketing and their strategy was all wrong. And the way that we were actually delivering these vehicles was poor. So they ended up laying a bunch of people off, not by way of the way that they were manufactured, but just by way of the business model. And they laid a bunch of people off. I was one of those people. I think there's about 20 or 25 people in the bunch. And we got laid off. I was laid off for a little bit. I was on EI. And I'm like, oh, geez. I called my wife when I got laid off. I'm like, God, I just got let go. And she was like, that's amazing. Congratulations. I'm like, what do you mean congratulations? She was like, well, you're so good at the real estate thing, because I had done a couple of deals by this point, just evenings and weekends. She's like, you're so good at the real estate thing. Maybe you can go and do that. So I'm like, okay, let me explore this. So that's how I got back into, understanding the business and the way that real estate worked. And then it just kind of progressed from there, from 9 to 5, cold turkey, to saying, okay, Charlie, you're on your own. It's go time. You better get out there and make something of yourself. So that's exactly how it went.
When did you get married? Like how young were you when you got married?
About the same age, 25.
So you got married at 25. Okay. And what's your wife was doing something that was sort of sustainable to give you a little bit of comfort or cushion there in terms of, I don't need to earn money right away? Or was it just do or die?
Yeah, so
you just went out there.
She had call me B. I mean, she had a 9-to-5 job as well. But I mean, at the end of the day, for a lot of people, it takes dual income to survive or thrive. And for us, we were no different. We were newlyweds. We just bought our first and then I guess second house. So we didn't have a ton of cash or a ton of runway to really make a bunch of mistakes. So for me, YouTube was just coming out in its infancy in terms of real estate support. So all of the real estate knowledge that I had gained up until that point was like a bit from my realtor. It was a bit from YouTube. It was a bit from just being the hands-on type of guy that I was and saying, okay, let's get gritty, let's get in this, and let's learn.
Yeah. Who were your mentors? So you had YouTube, whether it was Matt McKeever wasn't doing it back then.
He was not. No, truthfully, I didn't have any. Have any. So
no mentors. But you did coaching later on. I think we both did coaching under Stefan Arneo's outfit. I think you did the platinum.
I did. I took some stuff in, but I mean, I was very well established before I.
By that point, that was just like a next step. Yeah.
Yeah, I just did it, man. I just jumped in. I watched YouTube, and I'm like, yeah, okay, that makes a lot of sense. I'll go and do my own basement apartment. And then I did. It was like a fire retrofit. So for the duplex guys out there, it was a fire retrofit. So that was my first one. The apartment existed. I touched it up a little bit. Fire department came in and inspected it, got it legal. And then I sold it, made some money, sold a principal residence, made some money. Now I had some seed capital, right? And then I went back out again and said, okay, CIBC was my main lender at that point, and they were still qualifying me for mortgages. based on the prior year's T1 general.
Okay.
So I was unemployed. I was unemployed. I'm going back here. I was unemployed, still getting mortgages and being able to work on this full time.
That's incredible.
Right? So it was amazing. It was just a really good way for me to get out there and hustle and make it happen.
Wow.
Which would never happen today, by the way.
Well, you know what? I feel like that
so
slipped through the cracks. I've heard of that kind of thing happening. Every once in a while, things slip through the cracks. So that worked out really well for you. Were you doing all the renovations yourself by hand?
At first, I was. Yeah.
Yeah. So you're framing your own walls, hanging your own drywall.
Yes.
Taping?
Yeah. The whole bit.
Well, okay. I kind of want to learn how to tape. Never tried that. I felt like I would screw it up, so I just didn't.
Do it. Go work with a pro taper for a week, or a day, or whatever interests you. To watch these guys move, they just float through the room like butterflies. They're so good. There's no mess. It's like art. I don't know how they do it. It's amazing.
Yeah, it's incredible. I actually would like to. Yeah, it's just one of those things I've always been curious about. Just would like to just try it. I framed a basement because I wanted to say I had done it. Thought that'd be fun. And eventually when I build my own house, I want to build my own house.
Yeah.
I actually do want to work on it a bunch myself. I want to be involved.
One thing that's, I think, been a huge compliment to my success has been because I came from, not that construction is the bottom, because it's not, but because I started from the bottom rung and worked my way up to where I am now, to where we can come on and I can talk, or like I can speak with education for a podcast. I did the drywall, I did the framing, I get it. I did the house buying, I understand the mortgages, and all of the successes that I've had have led me to where I am today. And because I have had that, I can actually talk to my staff and articulate exactly what I want to see and why I want to see it, because I've been there.
I couldn't agree more. Like knowing the parts. Like I used to sleep in my job sites.
Yeah.
I mostly yelled at people on the phone, but I did do a little bit of all the jobs, and I was so keenly aware of every part of the process.
Yeah.
Even though I didn't know how to tape, I've watched them. I knew roughly what went into it. Yeah. I had a pretty good idea. And I think like what I know, because I did that, people who haven't done it just can't relate. They can't relate to it. Yeah. What things cost and what time goes into something. Just knowing those things. How long should something take when you're budgeting time for things? When you've done it and you've watched others do it, you kind of have an idea. You have a feeling.
Sure.
And now what you're doing is it's incredible. Like the progression, I don't think I've seen that kind of progression of like a level of sophistication and understanding zoning, development, construction, flipping properties. Would you say flipping properties is your kind of your bread and butter? You're selling most of what you buy?
No, I would say I'm a 50-50. I'm a 50-50 guy. Sell half, keep half. If I see there's longer upside potential in what I'm holding, then I will oftentimes slightly over renovate the property on the way in, knowing that I want to have a 30-year runway to keep it. And if I sell it somehow, okay, but at least I know that property is awesome, and the next guy getting it is going to get an awesome property too, right? So that's number one. A lot of people have this misconception where they'll buy a property and they'll under renovate it and do nothing, and then they'll spend all of their time fixing the problems, and it costs them twice as much in the next 5 years than it does when they just could have done it on the way in. Like basement waterproofing, prime example. Waterproof every house. Just be done with it.
Yeah, I'm of that mentality now. If I'm going to finish the basement, I've broken the rule a couple of times when I had a really good reason to. But generally speaking, if I'm at all concerned, just waterproof it.
Just do it.
Because you don't want that headache. You just don't want it.
It's the worst phone call, man. It's
because it's so expensive too.
And you're going to go and put 100 G's into a basement or something, and then now you got 6 inches of water down there. Just
problem is even the waterproofed ones, some pump can fail. Water can come in through a window still. I've had it all happen. You could think you're good and you're not. Such is the life, I think, of this business.
That's true.
Real quick, because I know we're going on here, but it's just pure gold. Your wholesaling activities, like how are you're so keen on 66 cents for $1, how are you doing that?
Yeah. So for me, it's purely a marketing play. So for every, we'll just say yellow letters. For every yellow letter that you send out, I would like to see a 1% response rate, and of that 1% might be a deal. So because we've still got our calculators up, if you send out 10,000 flyers times 1%, that's 100 people might call you back. And on that, you might find a deal. So send out 10,000 flyers, and out of your 10,000, you'll probably get one. So
100 calls, you think, on 10,000?
I think so. I'm using a 1-in-1. right? Maybe it's 0.5%, maybe it's 1.5%.
And have you set up a separate branding from your company for your letters? Like, do you have like OshawaHouseBuyers.com or something like that?
Yeah. So for me, I'm using rwcarinvestment.com.
Mm-hmm.
And then what I do with that, sometimes I put it on my letters and sometimes I don't.
Mm-hmm.
Right. Sometimes I'll use a local area code. Sometimes I'll use a Toronto area code. Marketing is like drilling for oil. Right. And when you hit a vein, double down on that. But until you hit that vein, you're always searching. Right?
Just switching things up.
Yeah. Trying to find that yield.
How often are you sending out, say, 10,000? Are you doing that every month, every week, every couple of weeks?
Every couple of months.
Every couple of months you send out 10,000 and just keep that going?
Yeah. Okay. And on average, actually, I've got a poster on the other side of the wall. On average, I'm about 30.35 to 33 cents per flyer plus HST. So if you're going to send out 10,000 flyers times 30.35 cents, 10,000 times 0.3035, that's $3,000 in flyers.
So you're $3,000 in flyers to get a deal, pretty much.
Yep, $3,000 to $5,000.
And
right.
I mean, your average flip, I'm assuming that would you be looking to make $100,000 to do a deal? Is that kind of your threshold, or what's your threshold before you'll say do that deal?
Yeah, I wouldn't do a deal for any less than 30 or 35K. And that doesn't include, so everybody knows, that doesn't include like the back end of the operation, like my
your
general
admin,
liability insurance, my admin, my stuff like this. This is like top line numbers.
Yeah.
So, I mean, if you're going to go out and do 4 flips a year at $40,000, right?
Mm-hmm.
You're 4, 8, 12, 160 top line. And then you back out your admin and your insurance and your da-da-da-da-da.
Yeah.
Right. So I wouldn't do a deal for any less than 30, 35K, no matter what.
And that's in a worst case scenario. I think I remember you talking about that.
Yeah. Otherwise, you're better to just be a contractor.
Yeah.
Right? Why go out if contracting or construction is the reason that flip is making money? Why go out and put the capital and the time into finding that deal and doing the work and hanging the drywall and doing all this stuff to make $10,000 when you can go and do that risk free and do it for somebody else?
Great point. That actually is why I do contracting as well.
There you go. Right.
Yeah. I'm doing that right now. Building 15 townhouses for a developer. So you absolutely have to make sense of your deal, and you can't force a deal to work.
Yes.
And I definitely can see where you're coming from. Of course, there may be an opportunity for you to just wholesale the deal out, I guess. Do you ever do that? You just send something out? Yeah.
I do. If anybody's listening and want to sign up to my buyers list, go to the same website, rwcarinvestment.com, and you can go there and sign up for the We Buy Houses Fast, and we'll put you in the database. I do wholesale, and sometimes, because I'm such a big proponent of highest and best use, sometimes highest and best use is to not do anything at all.
Yeah, just leave it.
Turn it over to somebody, like some homeowner that wants to do the work themselves, like DIY.
Yeah.
Sometimes don't touch it. Sometimes there's more yield.
That's brilliant, man. This has been really cool. Just in terms of directing people, do you want them to go to your website? Should they follow you on Instagram? Like, where do you want to send people? Yeah,
definitely sign up for the book, thehighestandbestuse.com. That's coming out in spring 2021 market. Mm-hmm. And then, follow me on Facebook, Instagram. I got a business page, RW Carr.
RW Carr. So is that the handle, RW Carr? Yeah.
So on Instagram, we're RW Carr Investment Co. And on Facebook, you can find me at Ryan Carr or RW Carr Investment.
Okay. And just any sort of words of wisdom here that you'd like to leave parting. I know you have a lot of slogans on your wall, but something that you think, based on our conversation today, people should hear.
I think just in general, you need to turn into a sponge and really soak up any information that anybody's willing to give you. Like, there's so many smart people that go to these real estate meetups, and so many good podcasts. Your podcast is awesome. So many smart people that come on these things and give away a ton of information for free that doesn't cost you anything. Like, listen to it in the car, put it on YouTube at night, pick up a book, anything that you can learn at no cost or very little time is definitely a benefit. So do that, be a sponge, soak it up, and you'll win.
Great point, man. And yeah, with this podcast, you'll be episode, I don't know, the early 80s.
That's amazing.
That's like 5 hours of content available now. That is just it's like the handbook of all these different people of how they did it. And it's not listening to one, but it's when you listen to 4 or 5 different people say the same thing in a different way where it really sticks. And so the people who have listened to every episode, I can tell in the way they speak. And usually by that point, they're telling me that they did a deal. And by listening to all these episodes, it helped them get going. And I'm not exaggerating. I'm not trying to toot my horn. I'm just telling that for the people that are listening. Like, it's not me, it's the people I'm interviewing. And maybe if I'm, fortunate enough to add some value in there too, then that's a plus. So it's there. And as Ryan said, really smart guy. Ryan, I'm sure people got so much value out of this. So thank you so much. And I will look forward to eventually one day, maybe popping out and seeing some of your projects, and hopefully we can do an in-person interview too.
Yeah, please do. That'd be awesome.
Thanks for watching today's episode. Just a friendly reminder to please rate and review this podcast on iTunes. If you're watching on YouTube, make sure that you smash the like and subscribe and notification bell. And also leave a comment. And hey, while you're at it, why not share this episode with somebody you think it could help? It helps this podcast grow, and I would really appreciate it. Thanks again. We'll see you on the next episode.